The Dialogue with Clement Manyathela.
It's not just another roundtable discussion.
Let's walk the talk on 702.
All right, so on our Thursday Dialogue this morning, we are debating the different options to raise government revenue. We have to look at what's viable, what's not viable, what would work, what wouldn't work. So what options are available for this budget to be a budget that is pro-growth? And that's what I want us to look at, because there have been so many different options that have been put forward. Reports are now suggesting that a new budget proposal by the finance minister was rejected in a cabinet meeting on Monday. The DA has since presented its own options, so have other organizations and economists. So we're going to look at these different options, and you can weigh in and join the conversation, an academic and analyst as well. I'm going to start with you, Dr. Burke, just in summary for maybe people who are still wondering, what is this option that the DA is putting forward for the finance minister to raise revenue? Just explain just briefly to our listeners what you have proposed, just what's at the core of your proposal for the finance minister.
Yep, the premise of the question is already a bit difficult in that we have fallen prey to a false ANC narrative that says we need more money in the fiscus to meet the ever-growing expenditure line items for the fiscus. Maybe one step back from that is the following. The 1995 Mandela budget was inflation adjusted in 2025 money, a third of the size of the proposed 2025 budget. And that government in 1995 did so much more for the citizens of South Africa. Likewise, the Mbeki budget was half the size of this budget. So it's simply not a problem of revenue. It's a problem of expenditure and scrutiny on that expenditure. Now you ask, what are the core points in our proposed alternative? The first one is no new taxes, be that personal income tax, VAT, or corporate tax. The second one is increased collection of existing taxes already due to SARS, and they've indicated to us with a 3.5 billion rand addition for their compliance department, they're able to bring in the 60 billion rand so-called shortfall that the VAT measure, the ANC 2% VAT measure, might have contributed to the fiscus. The third part of our plan is an economy that's open for investment that will include reforming our rail network as well as our ports. Cape Town is now the worst run port in the world, and allowing private sector participants to fully contribute to the national electricity grid. Very topical given what's happened over the last few weeks. The fourth point is cutting unnecessary expenditure, and under that we can go into quite a bit of detail today. And the fifth point is saying we need to not just immediately cut unnecessary expenditure, but we need to engage in a comprehensive spending review, which we suggest is broken up into two phases: the 3-month sprint over the timeline that we will have at our disposal anyway, because passing the budget requires a number of laws that will take about 3 to 4 months, and then a longer 9-month period where the assessment is done by Treasury of where these inefficiencies exist, and that additional efficiency being unlocked gets added back to the fiscus. And then finally, the 6th point in our 6-point plan is that critical services cannot be cut back. So there's this false ANC narrative that if they can't punish South Africans with a 2% VAT increase, then they will punish South Africans with an austerity budget that cuts back on teachers, nurses, doctors, and police officers. So broadly speaking, those are the 6 points in our alternative.
Oh, okay. And Zimbali, as the Institute for Economic Justice, you have also come up with a list of suggestions to replace this VAT hike in the 2025 budget. Well, I know you disagree fundamentally with the DA on the no tax increases call. You're calling it an extremist position. What's your proposal?
Yeah, no, thanks, Clement. I think the starting point for us is to say that we should see the budget not only as a tool to balance arbitrary targets and revenue and expenditure, but as a tool to drive societal and structural transformation in the economy. And part of that is actually recognizing the role that taxes can play. So we agree with the principle that you cannot increase taxes that affect the poor more, such as a VAT hike would have. However, we calling for an increase in progressive tax measures, given the high levels of wealth concentration and income inequality in South Africa. These are much needed to not only redistribute income, but to also help us tackle the challenge of inequality that we face in South Africa. We know that just 10% of the population owns a substantial wealth of public wealth, rather, which is 55% when you look at personal wealth in particular. And so our proposals stem from this realization, and we group them accordingly from those that seek to reduce tax breaks for high-income earners and corporates, to new taxes, particularly on the wealthy, as well as to non-revenue measures that exist, such as the gold and contingency reserve, which is known as the GFECTRA, which the government previously drew down upon about 1/3 of this in last year's budget to pay down debt. And so it's still money that is available to the government to put towards social and economic priorities. So we can get into the details, but those are the three strands according to which our proposals are structured.
Okay. Khaya, you wrote an opinion piece really looking at discussing what South Africa needs to do, and you argue there that we need economic growth and no tax can plug the gap. So if you're not going to have a VAT increase or corporate tax increase, personal income tax, or maybe even a wealth tax, then what is the option here? Because growing the economy as well is not something that's going to take a couple of months. And Treasury says we need this 60 billion rand for this financial year now.
The crux of the problem is that all the taxes that you mentioned, taxes are a byproduct of something else having happened. VAT is a byproduct of somebody actively engaging in a transaction, which means they have to have the financial capacity to engage in a transaction. Income tax is a byproduct of somebody having generated a taxable income. Corporate income tax is a byproduct of an entity generating taxable income. So all the taxes that you talk about must actually be backed by some underlying economic activity. And that is precisely the point here, in that when that underlying economic activity itself is not the focus area, it doesn't actually matter what spectrum of taxes you have. It doesn't matter what the rate of taxes you have. You are essentially going to reach a particular plateau when you're only really extracting as much as you can from a narrow base. So it's only when you expand the base and the economic activity of all of those underlying taxes, then you actually stand a chance of increasing those taxes in the long run. This is obviously to be distinguished from a short-term question of, well, if we needed 2 or 3 billion rand tomorrow, what would we do? But South Africa doesn't need 60 billion rand now. South Africa needs a broader tax base on a permanent basis, which means that you must go back to the underlying building blocks of every single tax, and that is clearly underlying economic activity.
And cutting expenditure, because that is something else that's also being considered. And again, government now is using it as, well, if you guys don't want increases in taxes, then we're going to cut expenditure and you are still going to cry foul.
It's quite important to figure out what exactly that deliberation is. So if the deliberation here is that the state in its current configuration needs an additional 10 rand or 10 billion rand in order to function, you have to then ask yourself the question that if everybody had been spending all their resources as well as they should, would that mean that there are no future requests for additional resources? And if that's the case, that's wonderful. My worry about this idea of cutting expenditure is that it is seen as the overnight solution to a longer term problem. And what that means is that, yes, we can cut expenditure and we can make sure that everybody spends it as efficiently as they need to. And that will probably be a 2 or 3 or maybe even a medium term solution. In the long run, those same departments that are now more efficient and more effective will then say, well, actually, we've been doing so much, but the cost of doing these things keep increasing incrementally. So therefore, the question comes back anyway to say, okay, cool. Even within an efficient state, you have to find a way of generating revenues on an incremental basis. So yes, in this instance, there's clearly a lot of wastage there. And if everybody could fix that, which they definitely won't overnight, then it will get us somewhere. But again, the longer term question is, how do you then grow the baseline for this revenue source so that you don't keep running into these particular problems. So I fear that sometimes people feel that, well, if you simply tell them to cut expenditure and cut wastage, then that solves the problem. It doesn't solve the problem, because even the best functioning departments will then tell you that actually we could do more. I'll give you two examples: the Auditor General and SARS. No one can accuse them of engaging in any form of wasteful expenditure, but even they, as efficiently run as they are, they say we need more resources so we can do more with our mandate. You've got the same problem at Stats SA, you've got the same problem in the IEC. No one accused them of engaging in wasteful expenditure, but they said that we need more. So yes, sort out the wasteful expenditure, but I tell you that you're still going to have a question for actually still need more, and that's what I need to solve for.
Yeah. Dr. Burke, you can come in there on the issue of cost-cutting measures, because part of your proposal is that maybe hiring freezes, less expenditure on travel, etc. Government departments, as you know, are already stripped bare due to budget cuts. So how much more can be spared, and could this not affect their services?
There's a distinction to be made between what are some of the bottlenecks we are experiencing and what are ever-expanding departments that has a ton of overlap with other departments. So in all the examples mentioned by Khaya Sithole just now, I find no issue with what he said. If we give SARS 3.5 billion rand more, they've indicated to us their collections will go up from 63 to 67%, which in and of itself will add 60 billion rand to the fiscus. I would also point out, for example, the NPA at the right level of hiring could serve South Africa well. But there's no point for us to hire more people into CETAs, which are these training authorities costing the fiscus almost 20 billion rand a year. They're the subject of multiple SIU investigations. They're maladministered, they're deeply corrupt, and we should be scrapping them, not adding money to them. So I can go on with examples. I mean, when we mention the state needing to be able to function, I don't think that a deployment in the DRC, which costs us 1.6 billion rand, meets that threshold of the state being able to function. It's a vanity project that has no tie to the reality of South Africans who can't make it to the end of the month. So these cuts that we're talking about are not on essential, critical bottleneck functions of government. It's on all the excess and bloat that we all know exists.
And how much is that going to give you, though, over a short period of time? And is that enough?
Well, the spending cuts, yeah. So again, the spending cuts that we've been able to identify just within the last week of putting our heads together is north of 30 billion rand. And these are things we could do in a matter of weeks. But then there are capable, committed folks at Treasury, another government department who's using the resources at its disposal mostly well. Those folks should help us think over the next 3 months of what could be identified. That can happen before the budget is passed in Parliament. And then a longer 9-month period to add these efficiencies back. So the things we're proposing are not multi-year projects. It'll happen in this financial year, and it will be to the benefit of South Africans. And by the way, a 2% VAT increase is not to the benefit of South Africans.
Khaya, I see you shaking your head there.
Yeah, I'm just curious about the references to the CETAs, for example, because CETAs actually are not funded by a tax and they're funded by a levy. And South Africa, historically, well, National Treasury in particular, has a strong aversion towards levies because levies are ring-fenced. So what a skills development levy is, it actually says to a corporate entity, you will pay a portion of your payroll towards this sectoral education and training authority. And this authority must then engage with the sector itself and say, what type of skills do you need? What type of assistance do you need in order to grow the sector? So these are actually ring-fenced amounts. My fear is that even if you say, let's abolish them tomorrow, well, the only way to then get that money to flow into the system will be to then move that not on a half 1% from a levy model to a tax model. So if you say that you're abolishing CETAs, you're actually leaving the money on the table. It goes nowhere. So it's a dead weight scenario. I don't think CETAs are a good example of that. I agree that of the 21 CETAs, I also have strong reservations about the utility of some of them. I have strong reservations about just the efficiency that are inherent within there. But if we are to solve for a revenue problem, closing down CETAs actually cuts down on available resources.
Mm-hmm. Let me bring in Zimbali here. Zimbali, you believe as the Institute for Economic Justice that South Africa undertaxes the wealth and should maybe implement a net wealth tax. Do you want to maybe expand of that, and then I'll get Khaya to respond, because I know he also has some thoughts on that.
Yeah, no, thanks. I think when we're looking at, for instance, increasing our tax to GDP ratio, which is currently at around 25%, we think that taxing wealth is a key measure. And this stems from particularly the rebates that are currently being given to not only high income earners, but also the wealthy. And I'll start with the CIT rates, and then come into the question of net worth taxes. So usually when we're saying there's no room to increase taxes, we quote the statutory rate, which is, when you look at CIT, is 27%. But the actual tax that is paid by companies in South Africa is hovering around 17.6%, right? And this is after you've taken into account the deductions and the rebates and all the incentives that these companies get, right? And this is very poor according to international standards and countries that are of the same level of economic development with South Africa. And usually when we raise questions like these, we are told that decreasing taxes will support investment. However, there are no studies that are cited to show, in effect, what sort of investment potential does a decrease in CIT rates bring, or even the 27% decrease from 28 that we saw previously. There's no study that has indicated what sort of revenue this has generated for the economy, right? And we know that investment is a byproduct of other factors such as skills supply, such as infrastructure, and so on, right? And then secondly, when it comes to the question of wealth taxes, I mentioned before that we have like 1% of the population that has 55% of all wealth in South Africa, right? And this has not changed fundamentally since 1993. On the other hand, we have had an unemployment problem that is structural, which has increased, and our economy is stuck on a low growth path, particularly because of the fiscal strategy that the National Treasury has chosen to pursue, right? And so at the back of that, our proposal, and a proposal which comes at the back of a study by the Southern Center for Inequality Studies, shows that if you are taxing 1% of the richest in South Africa, you're able to generate somewhere between 70 to 170 billion annually, right? And this is money that can be redirected to actually support economic growth and through supporting and ramping up public employment programs, and through also supporting basic services. I think it's true what you raised, that these sort of proposals that we're raising are very short term, some of them, but it's at the back of the crisis that we're facing. But I think we also need to look at spending in particular as a mechanism that, if directed in the right manner, can help us generate growth, which I think I agree with Khaya that we do need growth. But at the same time, we also need to agree that we are not taxing particularly the wealthy and corporates more effectively.
Okay.
Could I come in there?
Dr. Burke, you can come in, and then Khaya will come in after.
Sure. So there's a couple of points there. I actually just quickly respond to the CETA point. Whether we call it a levy or a tax, it's money flowing from the private sector to the public sector into our fiscus. Companies already have it baked in. It's not a new tax or loss they have to account for. In the short term, there are provisions in the Skills Development Act that allows the minister, after some consultation, to dissolve CETAs, place them into admin, or even issue instructions, and it could be done in a very short space of time. There are also provisions in the Act to put money that's not used into investments. So if we had the political will, we could do all of this and basically save a bunch of money in the short run, and then amend legislation during the course of the year to access that 20 billion rand every year from now on forward. But then also to respond to some of the points of the IHA. The fact of the matter is, taxes have been increasing progressively for a number of years, but our inequality has also increased over a number of years. So whatever tax you want to impose on whichever portion of society is not working on reducing our inequality. And I'm a bit concerned that the IEJ is now referencing another institute in their studies, probably more nebulous than the IEJ in terms of its funding, and saying, these guys are saying it's a good idea, let's try it. It's not working. We need to find a different mechanism to create a more level playing field in South Africa. And that mechanism does not look like taxing poor gogos 2% more on every purchase.
Khaya?
So I think, when it comes to this question of whether our tax rate is appropriate, in fact, it's moved from 48% in 1993 to the 27% now in terms of corporate tax. But that's not actually what the crux of the issue is here. The crux of the issue here is that in the designing of tax modeling for corporates and for personal income tax, South Africa cannot assume that it lives in isolation, particularly when capital mobility is so high. So if somebody said that the tax rate in South Africa was 40% and in Mauritius it's 15%, which it is, what do you think people are going to look at their businesses? So when it comes to policy making, those that are responsible for making decisions have to deal with very difficult trade-offs. And I think for us to reduce this to a binary number of, 29 sounds better than 27, then that's where we should go. It sort of then just doesn't pay due credence to how complicated the process is. That's the first part. The other element of it is that this comparison of what the quoted tax rate is of 27% is versus the effective tax rate of maybe 17%. That seems to work on the premise that South Africa has a revenue-based tax model. We don't. We have a taxable income tax model, which simply means that if you sell something for 100 Rand, the tax is not based on 100 Rand. The tax is based on the profits that you've generated on that particular item, which is why then you use the concept of taxable income. So it is not helpful to simply say that, instead of 27, they're paying 17. You actually have to look at the underlying structure of the model. And of course, if you decide that we must move to a revenue tax based taxation system, then that's a different conversation altogether. But we cannot simply demonize the model as it is because we are talking out of desperation. We have to be able to understand it and articulate it. So when people make decisions, it is on the basis of them having a clear understanding of how the system works.
Okay, it's 11:31 now.
The Dialogue with Clement Manyathela.
It's not just another roundtable discussion.
Let's walk the talk on 702.
Before 12 o'clock. Let's go to your WhatsApps now. If you've got questions for my guests, you've got inputs, maybe you want to respond to some of the things they've said. 011-883-0702. WhatsApp's on 072-702-1702. And before we go to the WhatsApps, Khaya, Zimbali spoke about the wealth tax. I wanted to get your response on that because the opinion piece I read that you wrote gets into that.
Look, I think if there is indeed a scope to raise 70 or up to 170 billion rand in taxes, National Treasury would not have ignored that. I think it would be interesting to see the data underlying that. What we do know is that South Africa has deliberated on this question. As recently as 2018, there was yet another commission that looked onto the question of the feasibility of wealth taxes in South Africa. That's one part. A more important part is that South Africa already has at least 3 forms of wealth taxes as it is today, which is the donations tax, estate duty, and capital gains tax, right? Now, the problem with these wealth taxes is that wealth taxes tend to be passive in nature. There has to be a trigger event, and you cannot compel a person in order to get into the trigger event. So estate duty, for example, you kind of have to die for that to materialize as a tax. For transfer duty, you kind of have to enter into a property transaction. For capital gains tax, you kind of have to voluntarily decide to sell an asset. So all of those wealth taxes have proven to be ineffective in light of the fact that people cannot be compelled to actually engage in transactions that generate those taxes. So I think when we do consider the question of wealth taxes, we also have to come back to the question of, South Africa has wealthy people. I agree with that. I know that. You've seen it. South Africa doesn't have a wealthy person's database. In other words, if you say to National Treasury, put together a 20% wealth tax overnight, they couldn't possibly tell you who's going to pay it. They couldn't possibly tell you how much they're going to generate because we actually haven't done a proper database of what the wealth profile of individuals are. So when you do your annual tax return, you tell them about the income that you've made, you tell them about the capital gains that you've made. They do not ask you, so actually behind the scenes, what is the value of the house? What is the value of all these assets that you're holding on to? So we do not have a wealth database. So I cannot vouch for a wealth tax because I do not know if it's going to generate any cent to begin with.
Yeah. Okay, let's go to some WhatsApp voice notes now.
Hi, Clement. Can your guest just maybe help us understand what the definition is for the wealthy? Because, I'm not sure what the wealthy means. You know, is it somebody that's earning 850? Is it someone earning 5 million? What is the definition of the wealthy?
Regarding the taxes in South Africa, government needs to do what any sane institution will do in terms of reducing cost. The standard approach constantly is to pass the cost on to us as citizens. We are paying enough. We cannot keep increasing our rates, increasing our taxes, demanding more and more and more while they do not take accountability. Government has told us for years that they pay above market rate for people because they need to attract skills to the public service. So those people are earning up to 30% more than they would in the private sector. Get rid of them. They are not effective. Our public service is not working. It's a well-known fact. Most private sector companies retrench. So do the same. Cut the cost. And then in 2-3 years, let us then absorb our graduates who are unemployed. It's young people who's got energy, who's got skills, and pay them a public service wage, not a above private sector wage. Hopefully that works.
Clement, why can't we reduce the number of our embassies as a cost-cutting measure? Because some of these embassies, Clement, you have to ask yourself, what are we getting in return? Where is they so expensive to sustain? Thanks, David.
Thank you for that. Dr. Burke, let me start with you if you've got any response to any of the questions that have been raised.
Well, first of all, I'm really impressed with your listeners' base, diversity of views, and all of them basically saying the same thing. Why are we taxing South Africans so much? And why is government so inefficient? One of the points just raised was on ambassadors and the cost abroad. I don't think our so-called Departments of International Relations, known as Foreign Affairs elsewhere, has really delivered any measurable value for us over the last 10 or 15 years at least. Singapore is a really interesting model of rolling ambassadors. So they cycle people into a country for a portion of the year. They usually take up affordable accommodation, which doesn't look like an embassy. And we, of course, know Singapore's sovereign wealth. You know, these things track in tandem. If you're disciplined with your finances, it will over time show. There are a couple of other points raised on a bloated civil service. Look, what we're not proposing is mass retrenchment for the sake of it. In fact, the opposite. We need to protect critical frontline services. But it's a valid question. Are we getting value for money? And what roles are being increased above inflation every year for no good reason? I've said just over the last few days in Parliament that parliamentary cleaners are now earning almost 30,000 Rand a year by April of next year. 30,000 Rand a month by April of next year on the negotiations that were signed. And then you've got teachers who earn 14 or 15,000 Rand at rural schools in South Africa. And I simply cannot reconcile those things. Something's gone wrong with some of these negotiations. And I've asked the minister this in Parliament. How often do we pencil in an amount and we end up with a far bigger amount? And it's not just those increases year on year. It's in general the value that we're extracting for these things. We've mentioned many examples now. I don't need to give you an endless list. But we all know at some level that government is deeply inefficient and there's so much corruption and maladministration baked into this. If we can take aim at that, if we can take aim at the executive class within SOEs and within departments, then we don't need any more taxes and we won't need to keep having this conversation.
Yeah. Zimbali?
Yeah, no, thanks. I think I want to just go back to the points I raised earlier, particularly on the proposal for a wealth tax. It's important to emphasize that in discussions like these and when topics like a wealth tax or any proposal are brought into the fore, we rely on evidence. And currently the credible study that is available is from SCIS. So I'm not sure if the critique that we're citing another institute stands or negates the rigorous work that has been done to show the potential value of this proposal. And it's important to also emphasize that the National Treasury itself, we proposed in Parliament this proposal before the Finance Standing Committee, and the response that we got was that the National Treasury is indeed looking at data that is available for this. In addition to that, SARS has also established a unit, I think it's called the Net Wealth Unit within SARS, that will particularly focus on collating data as well as resources to actually find out what is the underlying sort of concentration of wealth and how they can administer this tax. And so the work has already begun. And I think it's important to acknowledge that. And it's not a thing that will be done tomorrow. That's very true. But it's one of the measures that I think if we are saying we need a sustainable revenue, we should consider it. In addition to that, the point on tax incentives that accrue to corporates, I think that point hasn't been discussed at length here. And I want to highlight that there is that scope as well. When you look at things like the employment tax incentives, for instance, studies have shown that it hasn't brought in the required sort of objective that it was meant to do, which was to support employment and job creation. The government is losing about 5 billion per year on that incentive. We're not sure of its impact. If there is, it hasn't been presented to the public, right? We're also saying that we should also consider a luxury VAT. No one is talking about taxing the goggles, but rather a targeted form of VAT that specifically addresses those who purchase luxury items. And we're saying that these can raise about 9 billion annually. And these are some of the measures that can be immediately implemented alongside the discussions of a wealth tax and so on. And another point I wanted to emphasize, which I started on in my opening remarks, was the gold and foreign exchange contingency reserve account, which I did say the government dipped into it. And I think that we have proposed previously that it should be used for productive purposes in the economy, whether it's new capital expenditure and so on, and it can be ring-fenced to for that particular purpose.
Okay, I'll get Khaya to respond after the break. It's 11 minutes before 12.
The Dialogue with Clement Manyathela.
It's not just another roundtable discussion.
Let's walk the talk on 702.
7 minutes before 12, we're wrapping up our discussion around the options available for the finance minister. Khaya, there was someone who's asked a key question about defining the wealthy. How do you even define that?
Well, so far, the definition doesn't exist. What we do have is a reference point that says that those that are paid the highest rate in terms of personal income tax are those that are earning at least 1.8 million rand. So whether they regard themselves as wealthy is very debatable, because after just those taxes are taken off, you're down to much less than that. So that's the only reference point that we have. That is the last point at which SARS aggregates the data, because obviously they just don't have any point in checking the data beyond that. What we also might have insights to is how many high-value properties are traded on an annual basis. But the problem with that is that in the absence of very clear beneficial ownership data, we don't always know who's buying which properties. So if you look at places like Cape Town, for example, there might be far too many people who are not South African citizens that are fueling that particular bubble. What was mentioned by the IEJ is a very important point, in that in recent years, SARS has now started processes of collecting the data, of trying to figure out exactly who earns what. They do have a high net worth individual unit. You and I have never heard about it because it doesn't apply to you and I. But it is a unit where very rich taxpayers obviously get their issues dealt with. And at that point in time, I think SARS has a starting point in trying to understand what the profile of those high net worth individuals are. But they need to do much more work to try to work out how many people would meet whatever definition of wealth we come up with, and then figure out what type of assets they have and whether those assets can be taxed in order to generate any wealth tax. Because if it turns out all of their assets are houses that they live in, well, that's a problem.
But in as far as personal income tax is concerned, the wealthy, quote unquote, may also argue, but the more we get paid, the higher the tax is for us, and that in itself is a wealth tax.
Yeah, I don't think people are ever going to voluntarily agree that they're wealthy, except when it becomes unavoidable, like when your name is Johan, for example. So in which case you can't really dispute that you're wealthy. But everyone is going to say that, yeah, I was at 1.8 million, but you took away most, a significant chunk of it. And then I have to pay other costs. So actually, I'm no longer as wealthy as you are. So maybe the answer is much higher. Maybe it's beyond 5 million. Maybe it's beyond 10 million. We've never defined it. We don't know what the definition is.
Yeah, so that would affect you guys, not us, just mere employees. Unati in Centurion, good morning.
Hi, Clement.
Sure, go ahead. Oh, switch off your radio, brother. Please. All right, let's go.
Yes. As this debate is quite interesting because it cuts across various areas which are quite crucial. But for me, I think the issue of the net worth, or at least the wealth of the country, is sitting with the 10% people, right? Now, for us to grow the economy, it means that we need to broaden the scope, meaning that there's more people that need to be employed. But also we need not to ignore the fact that South Africa has been built on the cheap labor, right? The people who have made money are actually, it was because of the cheap labor. And now when it's bad, like it is now, we complain about the domestic workers that are earning 30,000. Now these are the things that fundamentally for me are quite concerning, because we're not talking about, the gentleman from the DA talks about involving the private sector. And if you go and look at this private sector, it's the very same people that are actually the concentration of wealth of this country sitting with. And the majority of those people, which is now in particular black, must simply be the workforce, and then and not actually addressing the issues of this inequality which the other colleagues are talking about, which I think for me is a fundamental issue. Thanks.
Thank you, Unati, for your thoughts. Salome says, Clement, I've really enjoyed this discussion. I wish we had more time on it, and I wish we had someone from Treasury as well. Well, I wish we would have someone from Treasury, but when Treasury is working on a budget, what do they call it? I think they call it like a closed period. A closed period. They can't talk to us. So they can't talk to us, yeah. But we know that, so we won't even go try, because that's a standard rule that comes in every single year. Thank you so much, Khaya. Thank you so much to Dr. Burke, and thank you to you as well, Zimbali, for joining us for this conversation. It's 3 minutes before 12.